And that was your look at the currency market. We'll have a discussion on that. But first, a story developing this afternoon. The Public Utilities Regulatory Commission, PURC, has announced a sharp increase in utility tariffs. Electricity tariffs have been increased by 27.15% and water by 21.55%. This new adjustment, according to the PURC, is as a result of the increase in inflation, the continuous depreciation of the cedi against major trading currencies, which, among other things, affect the operations and costs for service providers. The PRC boss, Dr. Ishmael Aka, says the move is to ensure these service providers stay in business. This is certainly going to impact industries as well. And joining me is Mark Bedu-Abuaje, who is Chief Executive of the Ghana National Chamber of Commerce and Industry. Good afternoon to you. Sir, your reaction to this announcement of new utility tariffs?
Good afternoon. For me, I think the PRC is not being sensitive to the plight of citizens and that of businesses. The environment already is very harsh. You have an economy which has experienced a depreciation of about 30% of your currency. Inflation is very high. Producer price index is high. And then we are having an increase in electricity and water. I think the timing is wrong. Second, the rate is also very high. We want to solve the issue of inflation. And once there's an increase in electricity, there's an increase in water, definitely there's going to be a pass-through effect. And inflation is going to go up.
Well, interestingly,
just a typical...
Yeah, I was just going to say, interestingly, they point out they are also having to do this because of the impact of inflation and the cedi depreciation.
Well, so what problem are we solving as a country? I mean, this is going to compound the issue of inflation and the challenges that we are all having as businesses and as individuals. For me, I mean, we are not against an increment, but I think that the timing is totally wrong and the rate is very high. If inflation around at this time is 30-something% and you are increasing electricity also by 27.15 and water by 21.55, definitely is going to feed through the cost of production and inflation is going to go up. So I still stand by what I said earlier, that it's harsh, the timing is wrong, and the rate is extremely high for us at this time. I think that if it could have been just a little bit lower, just also there for PURs to sustain themselves, that would be fine, because businesses are barely sustaining themselves. If you look at a typical business, 30% of their cost is electricity. And if you are increasing it by 27.15, it means it's going to go beyond 40% and it's going to increase the cost of production. And as I usually say, if we cannot contain the cost as businesses, we pass it through to consumers, and the cycle of inflation going up is still sustained.
As you mentioned, you're already having to grapple with high inflation, the cedi's decline. Paint a picture for us when you talk about how severely your operations will be impacted. What will this further do?
It's very severe. I give you a data that 30% of the cost of a typical manufacturing company is electricity. So now you are increasing it by 27.15, which means that you are adding another cost to it. So just the cost of electricity, you are just going to cover about, let's say, 40 to 45% of your cost. The other cost still remains because inflation is still high. Cedi is depreciating. So just take a typical business who is importing raw materials and adding value to it. The depreciation is there, about 30%. You have inflation of about 31.7%. Already your producer price index is very high. So this is going to increase the cost of production. So by the time you are done, you've gone way beyond your cost of production. And as the data from the first half of the year clearly indicates that businesses are either breaking even or they are running at a loss. So this one coming in, going to increase the cost of production. The likelihood that a lot of businesses are going to run at a loss is very high. And you all know the effect of businesses run at a loss. It will not be in the interest of the business. It will not be in the interest of those who are working in those companies. And it will not be in the interest of Mother Ghana. Because if they can't produce, the only thing they can do is to shut down and lay off those who are working. And that is what we are likely to experience in the not too distant future. If you continue increasing the cost of production for businesses.
And I'm sure businesses are expecting the government to step in. What can be done to cushion you right now? I know some of you are asking for tax reliefs. What essentially can be done?
Obviously, tax relief is okay. Obviously, we're not expecting just this increment. I mean, if you look at what is going on and for government and PRS to sit down and add on another cost, then definitely what you are telling businesses is that you don't want them to operate. Whatever it takes for all of us and also for economic management team to bring stability to the economy, if there is any time, the time is now. Let's put in place all the necessary measures, be it fiscal policy, be it monetary policy. If you have to take a tax reduction as a component of fiscal policy to just cushion businesses, I think they have to do it as quickly as possible.
All right, Mark Bedu-Abuaje, CEO of the Ghana National Chamber of Commerce and Industry, thank you so much for joining us with your reaction to the utility tariff hikes. Now, the cedi has lost 3 cedis, 15 pesos to the US dollar so far this year. This is equivalent to 33% since the cedi was redenominated in 2007. The local currency has come under severe pressure as some foreign holders of Ghana's Eurobonds have been selling off their stake. This plus other factors have triggered the high demand for the dollar, which is presently going for 9 cedi 70 pesos on the average on the retail market. However, the Bank of Ghana has given assurance that the cedi stability will be restored soon based on certain measures put in place. Meanwhile, the $750 million commercial loan approved by Parliament last month is expected to hit the account of the Bank of Ghana latest Thursday. This will help offset the demand for the dollar in recent times. The government will also be able to use part of the inflows to service imminent maturing foreign debt. Well, joining us, Dr. Benjamin Amwa, who is a senior finance lecturer at the University of Ghana Business School, also executive director of the Center for Economics, Finance and Inequality Studies. He joins us on Zoom. Just as we think about this, it just seems so unbelievable. 3 cedis, 15 peso loss to the dollar since the beginning of the year. And we are looking forward to the $750 million commercial loan, and we're expecting it to hit the Bank of Ghana's account on Thursday. Will this make any difference? Would this change the narrative a bit, Doc?
Thank you very much. Yes, there will be some marginal positive impact on the cedi. Now, I'm using the word marginal because, like you rightly said, 3.15 cedis is how much the cedi has lost in terms of face value from 1st January to today. What it means is that if you were owing a partner $1, you need now 3.15 cedis, 3.15 cedis more to be able to meet up that same $1. It means a lot when it comes to transaction cost for those who do this import business and they have to pay in US dollars. So the $750 million coming is good. On the other hand, we should be aware that the whole $750 million will not be pumped into currency management. There are other spending plans for the $750 million. If you look at how much even the BDCs themselves even need to lift crude, clearly $750 million is not that enough. But like they say, half a loaf is better than none. So we are expecting that with the $750 million coming, the city will have some marginal stability. And then again, the question is for how long will the city be able to stand its grounds going forward? So yes, there will be some positive effects.
For how long will the city be able to stand its ground? The central bank is given assurance to put in place measures, including purchasing gold from mining firms. Educate us on how that particular measure would help.
Okay, the gold purchased is from the historical background of the gold standard, where years back, before the World War I, World War II, gold were seen as a means of shoring up the value of currencies around the world. But then again, it was abandoned at a point in time because of World War I, World War II, when countries started printing their own currencies. What central banks do is that central banks hold what we call the official reserves. And this official reserves has in it a basket of assets. The basket of assets includes some investments, some strong trading currencies, and then some sovereign instruments. Now, when you purchase as a central bank gold, you are adding on to the pool of assets you have to support your currency. What then happens is that should your economy have difficulties like we are having now, then what you can do as a central bank is that you can now present your gold as a collateral to back short-term lifting of US dollars. So if we had created a huge pile of tons of gold through the central bank system, now that we are having difficulties, BOG will have fallen on that asset base to support the offtake of dollars, to support what we need in the country. But now the central bank want to go into it. Last year, September, central bank did the purchase. Central bank now want to add on. And this is similar to what Nigeria is doing with the rice production. Also, they have realized that Nigeria imports a lot of rice. So the central bank has gone through that system to support local production of rice. So we can compare the purchasing of the dollar, the purchasing of the gold, which most central banks in the world do with. The US is the major purchaser of gold in terms of the federal bank. The UK does it, Canada does it. So it is not strange. Germany also does the same thing. And so it is the right direction that our central bank is considering purchasing gold as adding on to its portfolio of assets, diversifying the pool to support the Ghana cedi.
Last question. Is the central bank being overstretched to act in the face of the cedi's decline?
But that is the mandate of the central bank, so we'll not call it overstretched. One of the mandates is to make sure that the currency is strong. So all that we are doing is that we just need the central bank to keep what they have been mandated to do, and that is to strengthen the local currency. So they are not being stretched at all. They are being innovative by adding on to the pool of assets they have to support the local currency.
Yeah, and I'm actually asking that because there's a school of thought that they are being overstretched because of the government's failure to, stabilize the economy in itself.
Yeah, that is from the fiscal point of view. When you are looking at government expenditure, government revenue, then you can clearly say that, yes, some of the acts on the side of government is what is putting some level of pressure on the central bank. But then again, the central bank has the monetary side of the economy to look at. So definitely, in as much as it appears that the fiscal aspect of the economy is not in sync with the monetary aspect, we still expect the central bank to respond. Because once you are controlling money and the cost of money within the economy and price levels, one will always come to the central bank to seek for answers, knowing very well that the fiscal side may be having some challenge.
All right. Thank you so much, Dr. Benjamin Amwa. He is Executive Director of Service, also a Senior Finance Lecturer at the University of Ghana Business School. Let's turn to the money market. Head of Trading at Republic Securities, Patrick Agama, joins us with an update. Patrick, so many things happening since we last spoke. cedi depreciating fast, inflation up, ratings downgrade. How are the markets reacting to this?
Okay, good afternoon, Daryl. So we are seeing clearly that on the fixed income market, the demand for the short-term securities are increasing. We are seeing investors tend towards the front and middle end of the yield curve instead of trading in some of the long-dated ones. So for last week, we saw the February 2023 security trading. It actually dominated the trading for last week. So we expect more of that in the coming weeks since investors expect interest rate to reprice in the short term.
Meantime, rising interest rates, great for the Treasury bill sale. Tell us how last week's auction ended.
Well, with regards to the auction last week, the government again exceeded its targets, raising about 1.8 billion Ghana cedis in the issuance of the 91, 182 and the 364-day bills. The subscription rate was around 130%. So we can see that interest is coming in. We saw the Treasury bill rising, the 91-day Treasury bill rising by 30 basis points to close at to 27.34%. The 182-day cleared at 28.73%, but the 364-day bill fell by 17 basis points to close at 28.23%. That is also showing the appetite of investors. You know, we saw the government rejecting some of the bids in the 364-day bills, and that can be as a result of the high rates that people are bidding for this particular bill.
And what should we expect on the stock market? Would the good performance continue from last week?
Well, last week the market rebounded and gained some momentum, closing at negative 8.20 year to date. That was impressive, but it was just on the back of MTN, Societe, and Cowbank in terms of equities. We are also seeing the market trade actively in the new gold ETF. That will also be a measure investors are taking going towards the gold instrument so that they can be able to mitigate their loss on the equities. We saw some losses recorded in GCB and ETI, and that was not enough to pull the market down, but it pulled the financial stock index down further for it to clear at 2.24 in terms of the negatives. Yeah.
All right, Patrick Edem Agama, Head of Trading at Republic Securities, I appreciate your time with us. The World Bank and International Monetary Fund have begun work to assess the sustainability of Ghana's debt. This is expected to facilitate the classification of the country based on its new debt level and influence ongoing discussion for an IMF program for Ghana. George Afe has more in this report.
The debt sustainability framework is jointly put together by the IMF for all its member countries. The two institutions uses the classification to basically assess the ability of its members to pay their debts now and in the future. It also helps in program design for its members, as one can talk about the HEPIC program, which Ghana benefited, and on the ongoing talks for an IMF program. The exercise will assess Ghana on 7 indicators, with some of the major areas being the country's debt in relation to revenue and also the debt as against our export earnings. The new classification is expected to help those that lend money to Ghana to review our creditworthiness. At the last review, Ghana was classified as high risk of debt distress. But with the country's rising debt stock, one is not sure whether Ghana could flip into the debt distress status. A new classification for Ghana could also influence the kind of program that the country will get from the IMF by the second quarter of next year. Many will be looking forward to the results, as some are worried that with the recent development in Ghana, the country could flip into debt distress. That could further triple the cost of servicing the country's loans and further increase the cost of doing business in the country.
You're watching The Marketplace. We're taking a short break. When we come back, we have guests from the University of Ghana Business School to talk about their upcoming Management Day celebration. Stay tuned. Thanks for staying with us on The Marketplace. The University of Ghana Business School is holding its 42nd Management Week celebration. There's going to be an event on the 19th of August on the theme, The Future of Business Education in Ghana, Building Effective Public Sector Institutions and Health Systems. Joy Business is proud to partner at this. Joining me in studio with a look ahead or look around it because it's happening, Dr. Manoisi, lecturer at the University of Ghana Business School, and Lowell Akwesi-Champon, President, Business House Junior Common Room. Happy to have you in studio to talk about this. So what is the rationale behind the Management Week celebration?
Okay, so good afternoon, Daryl, and thanks for having us, and thanks for the opportunity. Briefly, this whole thing is something that we've done over the years for the past 42 years. This is the 42nd edition, and basically it is for us to connect with business out there. You know, we do a whole round of teaching and research in the university. So when it gets to the management week like this, we try to bridge or bring academia close to industry. And this is where we connect with business professionals and our managers out there. So we share ideas on business generally and business education in Ghana.
Right, and the theme for this week is the future of business education. Can you shed more light on the theme for this week?
Okay, so what we do at the business school with this management week is that we rotate it around the various departments in the school. So we have 6 departments in the business school right now. What we do is that for every management week, one department will have to come up with a theme. And for this particular year, it is on the shoulders of the Department of Public Administration and Health Services Management, where I teach. So our theme is quite straightforward. We are so much concerned about public sector institutions. And for anybody who does public administration, that is our focus. So this time we are looking at how the future of business education is going to be like within the context of actually strengthening our public sector. Because you know that, Daryl, even if you work in whichever sector that you are in, you will have to operate within the web of public institutions.
That's true.
Yeah, so how we make them effective is what we want to focus on this time around.
So, Lowell, what role are students playing during this week?
Okay, so considering the activities that we have during this week, we would like students to participate a lot because looking at the activities, we'll be talking about the activities very soon. And students are going to benefit a lot. It's going to be insightful, educative, and it's going to be fun as well.
Okay, so you run us through the activities because of time. Let's see.
So we started this Saturday, that's 13th August. We started with a mega float. There was a kinky party. There was interdepartmental football games. And then on the Sunday, that's the 14th, we went out to do a donation at a coupon school for the blind. And then Monday, that is today, we're having our breakfast with mentors. So we have people from alumni from KPMG and other big firms coming to talk to the students as well. And then on Tuesday, we'll be having Rep Your School. So students will come in their school attire, and we invited a few senior high schools who will come around to have a few of the business school. We'll take them to the facilities that we have in the business school as well. And then on Wednesday, that's Management Day. So on Management Day, we are expecting the Pro VC to come around. We're expecting the Dean of the business school to be around on that day. Minister of Education too as well. So basically that day is for management. So management will be handling that day themselves. And then talking of the Thursday, that's the 18th, we'll be having a finance and investment summit.
Right.
We'll talk to students about finances and then investment. That same day, we'll be having Rep Your Jersey. And on that day as well, we'll be having movie night later that evening. And then on the 19th, that's a Friday, we have our entrepreneurship fair. The entrepreneurship fair, we'll be having our destination Legon as well. So entrepreneurship fair, students have been given projects to come and then present on that day. And then Destination Legon is going to talk about the whole Legon campus, and then we would have QR codes where students can scan and get to know the tourist sites that we have at the Legon campus. And then that evening, we'll be having our game night.
Okay,
yeah.
That sounds fun. And on the Friday, I guess it's going to be when you are going to have the talk, right, with the resource people.
That will be Wednesday.
That will be Wednesday, rather. Okay, so we have that wrong date on that flyer there. So,
okay.
Yeah. So, who are we expecting to speak at the event, Doc?
So a number of people we've invited. Like you said, we've invited the Minister of Education, who sits on top of the educational institution in Ghana. And then also we have Dr. Ebu Hammond, who is an alumni of the University of Ghana Business School, who works at the Ghana Health Service, a director there. He will come and share ideas with us on that. And then we also have the head of civil service.
All right.
I told you, because it's public administration, we are looking at So we invited somebody from the head of civil service. And then finally, we have our own Pro VC, who will also come and share issues and ideas with us.
All right. We'll be following closely and be reporting as well. So thank you for passing through Dr. Isi and Lowell Echampong, who is the president of the BHJCR and finance lecturer at the University of Ghana Business School. Thank you all for watching The Marketplace. We are back same time tomorrow.